So talk to me a little bit about from your perspective, because we're seeing that this feverish speculative nature happening right now. We've been seeing it in real estate, commercial real estate, but especially residential real estate. And I know you guys don't do residential, you're doing commercial, and residential real estate and commercial real estate are very much apples and oranges. But we're seeing residential, and I'm sure you're seeing this in Boise to a certain extent. They're going for $30, $40, $50,000 over asking. You're getting 10, 20, 30 offers over asking on single family homes now. First of all, your thoughts on that, and does that bleed into, in some way, commercial real estate?
Well, yeah, I mean, in our commercial real estate, we have, the lending operation we do here. We also own a fair bit of it here locally, including apartments, which is, I'm bleeding towards residential when you own apartments. Mm-hmm. So there's definitely a correlation between price of housing, the rental market, rental rates, all that. It's all inflating. And I don't want to get and I don't mean this to be political, it's just I think is a fact. You've got a pretty big group of people with an awful lot of equity and capital right now looking for a home. They've gotten used to these very low rates and very low cap rates for your investments on real estate, when I got in the lending business in 1982, there was a saying, the 10-year treasury was at 5%, real estate, you got 10%, and equity, you got 20. And that was the rule of thumb that ruled the roost for most of my career. Now everybody's gotten used to this 10-year treasury that roams around, $1.50. You got cap rates around 5 to 7%, and equity's even gotten squeezed to where people will take pretty risky equity investments in the mid-teens. So, that's money chasing those deals. That's why that's happening. There's people with money, and they've got to find a place to park it, and so they're rising prices. They're willing to make a bet that things going to inflate and go up in value, and we definitely are seeing that here. It's unbelievable, just as you pointed out. I mean, it's 10, 15, 20% over asking price. People I've heard are pricing the houses to create the bidding war to actually maximize the price they sell stuff for. I have done a tremendous amount of residential lending in my career as well. You got the affordability things that come along with a rising market like that. Of course, we still have low interest rates, but we're setting ourselves up potentially if we start to get a little bit of inflation and interest rates start to move up. That starts to sound a lot like a period of time where I got in the lending business in the early 80s. And I'm telling you, that was not fun.
Yeah, well, we're looking at 70s level inflation right now, and the problem we have when we are dealing with this massive costs that are going through the roof, whether it's lumber and steel or other commodities, home pricing, whatever it may be, we're seeing the chip shortages that are slowing down manufacturing for cars. And as you correctly stated earlier, it's impacting our supply lines, just coming out of a major pandemic. The question is, and I guess I'm going to ask you to put on your macroeconomist hat right now. When we see Jay Powell talking about the fact that they're not really seeing inflation, or it's going to be transitory, I think is the word. Yeah. And, short term. So they're not going to really start playing with increasing rates right now, because they know at the Fed that the second rates go up, even a smidgen, that the bubbles are going to burst in so many different sectors. Would you agree or disagree with that?
It'd be very problematic. It's problematic sort of on the level you're talking about when you start to look at, the debt structure moves together. So you've got companies able to borrow very, very low rates, floating rates, most of them.
Right. So it's free money right now.
Yeah. But that starts to run away, and, your cost of operations, interest becomes a much, much bigger problem for companies, bigger small businesses and, public companies. And of course, it becomes a big issue for the government too. They're financing their debt. So, it's one thing to be financing it at the low end of the curve when the curve is the way it is, and you're financing it, a 120 blended or less, probably 90 blended on the debt we're carrying as a country.
Yeah.
If that moves to, 5%, or as I mentioned in the early 80s, the prime interest rate was 21%. So it was an inverted yield curve, and that's not a good place to be. If you
So
have
they more or less kind of, put themselves in the corner here, because inflation's it is going up. Forget the politicians and forget the spokesholes on television, okay, repeating what the politicians say.
Yeah.
We all know this. You only need to look at gas prices and food prices and the consumer pricing index, and everything is going up. Everything. So your dollar is being devalued, okay? We're seeing a lot of money now coming out of the equities market, the bond markets, and they're going into things like more speculative things like cryptos, okay,
Yep.
which for many people have done very well with. Is that a flight to something that is disassociated with the dollar? And what does that say for the future when they're continuing to print it's not real printing, but they're just electronically making money out of nothing now? What does that do to the future for us as far as commodity prices and housing prices, commercial real estate prices?
Boy, you're going past my pay grade here for sure, because my partners and I have been looking at this situation for 20 years, going, how is this sustainable? So
with $30 trillion national debt now,
right. No, it's an incredible amount of debt, and that's the sort of hard number. But if you start going into the present value of the liabilities that the government's carrying, it's easily 120 trillion.
Yeah.
I mean, and if anyone denies that, they're smoking crack.
No, it's unfunded liabilities.
Right. And if you were a public company, you would have, or even a private company, you'd have to disclose that. It's very easy to do. You would just PV the liability, and it would give you a number. Yeah. It's a big number for our country. So how we deal with those things, I guess the best thing I've heard from folks is that we're the tallest midget in the world, and the rest of the countries of the world have done the same damn thing. And so everybody is, living in this little fantasy land, and how that all comes to an end is concerning. And we're small businessmen. That's what we are. We're entrepreneurial people. And, we sit back and look at these big, giant companies and the government, jeopardizing our ability to operate in the playground here. We think it's a great environment to do things. And from an entrepreneurial perspective, if you took those big macro risks off the table, like for my children, I have 4 kids that are starting to enter the workforce now. And I look at it and go, wow, there's just so much stuff to do where you have your own business and be successful and whatever, if we have a stable economy. And obviously it ebbs and flows. We're not going to get rid of that. But when you're, addressing the risks that you're pointing out today, you sit there and wonder, like, what can a normal person do to plan around something like that, other than to, go back to work and do the best you can running your small business and doing what you do. I mean,
how does that impact cost of goods sold? And for many of our clients, across the country, we're seeing that, obviously you've got the big boys, you've got Amazons and Walmarts, and they're fine. They've done incredibly well in the past year. The stay-at-home orders have put them into the moon. But the small to medium-sized businesses that were already struggling, especially retail, that was already struggling against online upstarts before the pandemic, now are having to deal with increasing costs and putting themselves in a position where they either raise costs and lose competitive advantage. Now they're maybe at a competitive disadvantage because they're never going to be as low as Walmart or Amazon, or they're going to have to suck it up and basically lose any margins. Is this something from your standpoint? Again, we're going back to the raising and lowering of interest rates, inflation, and coming back to commercial real estate from the standpoint of it impacting stores and retail centers all across the country.
Yeah, the last time that we, as a country, we faced inflation like I think we're looking at here, and by the way, I completely agree with your point. I love these guys on TV that say, "Yeah, inflation's coming." I'm like, "What do you mean it's coming?" Yeah. Go to the store, you idiots. I mean, go take a look. Buy a sheet of plywood or a 2x6 stud, and plywood's over $100 and the studs are over $10 a piece. I mean, people, I don't know that the people that are making the big decisions really relate to that kind of thinking, because they don't do it. Or food, to your point, cost of goods sold in a restaurant. Back in the day, early 80s, and I was a young person then, but I knew some guys that were pretty experienced, fortunately, to kind of help me along. And one of them was in the restaurant business, and he was telling me back in those days, I mean, they basically wrote their menus with an erasable marker. I mean, they were changing prices so fast that, you know, to keep up with the cost of goods sold, that's all they could do.
Yeah.
You know,
Yeah.
and you start getting into that double-digit inflation, which people are worried about coming now. I mean, you got to move price, and to your point, that's tricky. You know, and Walmart and Amazon and all those guys, you know, they got the very sophisticated ways of managing their supply chain, their costs. They're buying stuff forward. They're looking at all the things you're talking about. You know, a guy like me, you know, I'm in finance, so I'm you know, I have the advantage of, you know, working through some of this stuff. But, you know, if I was just in one of our business silos, and if I was running a restaurant, I don't have time to worry about all that crap. I just got to buy my stuff, figure out how to deliver it to my customers, and, you know, focus on running my business. And throwing this element of risk, you know, it again, I hate to get to this consolidation of wealth thing that's been going on for the last, you know, really 10 or 12 years in a pretty aggressive way for a number of reasons. But, you know, the people that have money can afford to put in these very sophisticated structures, and they can have a competitive advantage. They have low cost of capital. They've got the ability to hire lawyers and accountants to help them through these complicated things. And like you mentioned with the PPP, is a perfect example. The guys who got to the PPP money first, they had the best lawyers, the best accountants, and the best banking relationships. They all got the money first.